Hello, good morning. Yeah, now in this video, I'm going to explain this in this video. In this course, I'm going to explain the product cost by sales order scenario. Yeah, product cost by sales order is one type of a product costing technique which is available in SAP controlling module. Yeah, before going to this, then I will give brief discussion about the product cost by sales order, in which stages, in which method, in which scenarios we are going to implement this product cost by sales order scenario. Yeah, suppose client if it is any make to order business scenario. Make to order business scenario is nothing but what based on the sales order, customer based on the sales order, clients their companies are going to manufacturing of the product. That means here earlier till now we have seen that product cost by order, product cost by period, and mixed costing some in previous videos. Only based on the demand only we are going to manufacturing. That means there is no order at the time of a manufacturing. Now make to order scenario based on the customer order, based on the customer order only manufacturing process will start. Manufacturing process will do because here depends upon the customer order point of view only we are going to manufacturing. That means here same material, different customer orders, different requirements. Suppose material A, customer first customer, second customer, we can take example. Material is the same for first customer and the second customer. But first customer is a requirement is a different, second customer requirement may be different. If it is requirement different from customer to customer, definitely the manufacturing cost will vary from first customer to second customer. However, that means first customer requirement, based on the requirement we have to build bill of material. Based on the first customer requirement, manufacturing process need to be built. That means here bill of material and manufacturing process based on the customer wise we are going to build. So product cost is a vary from customer to customer, even material is the same. Even material is the same means material in material master only one price is there, standard price, whether it is a multiple valuation, legal valuation, group valuation, whatever it may be, if it is material ledger implementation concept. But if you maintain a rate in material master, that rate will go to the all all customers at the time of a delivery. That means here if you do standard cost estimation rate at the time of a marking and release, that rate will go and apply in material master. At the time of a sale order creation and delivery, system will take a same rate which is coming from material master. But here our point is that based on the customer order only we are going to manufacturing. That's why in this scenario, product cost by sales order scenario, instead of doing a standard cost estimation, we have to do sales order costing. Sales order costing. That means here sales order costing is at the time of a sales order creation, after sales order creation, based on the sales order, we are going to build bill of material and routing. Then if you do sale order costing, then this rate will not applicable in the material master, will not update. Okay. rate will not update if you do sales order costing. That means here sale order costing means if you do sale order cost estimation in sale order itself, one option will be available. Otherwise, one more transaction code also we can use. Through that, we can, if you do sale order costing, sale order cost estimation, this rate will not update in material master. This is the main important point. That means why this will rate will not apply, rail will not should not be updated in material master means if it is updated that rate, same rate will go to the all customers. But our main concept is the order wise manufacturing process means order wise bill of material, order wise BOM and routing concept is a different means BOM plus and routing depends upon the order wise. So if it is order wise bill of material design, order wise manufacturing process is a design, then so order wise itself is a rate also should be updated, not a material wise. This is the first major difference between make to stock and make to order. Make to order, make to stock is nothing but based on the demand in the market. We are going to manufacturing process. We will do manufacturing. Based on the demand, we will prepare a bill of material, we will prepare a routing. But according to that, we have to prepare a sales order costing. Then at the time of a sale order costing markup, then that sale order cost means sale order cost rate price will not update in material master. It will update in sales order itself only. Will update sales order itself only. That means then if it is not updated in material master, where it will go and update at the time of a sale order cost estimation means sale order cost estimation at the time of a saying that rate will go update in sale order itself only. And if you go and check in these conditions, one condition we will prepare and assign in configuration settings, that rate system is going to update at the time of a sale order costing. This is a major difference, major point of view make to order scenario. Here make to order scenario, there is no standard cost estimation for this scenario, such as CK11 and CK24 concept is not applicable in this for this one. CK11 and CK24 will not be updated in this scenario of no CK11 and CK24. Means there is no standard cost estimation for this one. Only sale order cost estimation. Okay. Now, in this product cost by sales order scenario, there are two types of a concepts. One is the valuated stock, and the second one is the non-valuated stock. Here, what is the valuated stock and what is the non-valuated stock? Valuated stock means here, for example, goods received with respect to production order. That production order with respect to sales order only we are going to create. Then, okay, then that situation in say in a production order, we can see clearly sales order. In all cases, in my product cost by order scenario, in all scenario, it's based on with respect to sale order only production order we are going to create both in valuated stock and non-valuated stock. But valuated stock means at the time of a goods receipt with respect to production order, that will update. If it is update in inventory, then we can count, that is a validated stock. If it is not update, if it is not update means there is no accounting entry for the time of a goods receipt as well as sale order delivery time also. That means here goods receipt with respect to production order, goods receipt from shop floor to inventory as well as delivery time. There is no accounting entry because of this is a non-validated stock. In that situation, we can use a non-validated stock concept. Non-validated stock means sometimes normally this we can use in the majorly product project system point of view. PS module point of view, we can do this type of a concept. Quantity will update in sell order stock level, but there is no value for this one. Goods receipt at the time of a goods receipt, quantity only will update. There is no value oriented. If it is a value at the time of a goods receipt and delivery accounting entry, if you want required, then we will go for valuated stock. Valuated stock is nothing but a majorly difference is the valuated non-valuated stock. Here some materials don't have a value, but stock is required. In that situation, we are going to treatment of for this non-valuated stock. If it is a value oriented, just like a normal material sale order delivery billing, then we will go for valuated stock. Okay. Now here, valuated stock, 2 points. That means one is the sales order costing is a compulsory for this one. Sales order costing without controlling object, without sale order controlling object. This is the one scenario. Here again valuated stock are two types. In the two methods are there, product costing methods. Here in valuated stock, sales order costing compulsory in all scenarios. In product cost by order scenario, sale order costing compulsory instead of a standard cost estimation. But here in this valuated stock first method, sale order costing but without sales order controlling object. What is mean by sales order controlling object means here normal scenarios till now what we did in a product cost by order scenario like goods issue, confirmation, goods receipt and month-end activities, template allocation, revaluation of order, WAP, variance settlements, whatever we did for the production order, here also same in this scenario, same we will do. Stop with the settlement and we will go for material ledger run. That means here goods receipt with respect to production manner, it will go to the sales or object, sales oriented object with valuated because of we are following valuated. But month-end activities only stopped with the production order only, not for sales order. Means here month-end process only for production order. That means month-end process means template allocation, revaluation of order, WIP, variance settlement, all these month-end activities of a product costing, we will do only for production order only, not for sales order. That means here this is very similar to product cost by order scenario, but instead of a standard costing, we will do sale order costing. That's it. This is the normally regularly almost 50 to 60% of clients are following this scenario. Means all scenarios clients depends upon the clients, depends upon the requirement we will do. But majorly sale order costing means instead of doing a sale order, instead of doing standard costing, sale order plus production order point of view only they will concentration at the time of a month end. This is the first scenario. And the second scenario, under valuated stock, same sales order costing with the sale order cost object. That means here same similarly till production order settlement, what we will do is in say product sale order costing without sale order cost object, plus additionally we have to do for this sale order settlement also. If any additionally expenses need to be booked for this sales order or revenues, some expenses without sales order process, without sale order delivery process, we can book directly to the sale order. No delivery concept, directly we can book from FI side. Similarly expenses also. So for example, expenses, sales and distribution and administration expenses, these two expenses will normally we will not design under our product costing. Means the cost of goods manufacture level only we are going to do inventory valuation. If any additionally expenses required, such as sales and distribution, administration expenses directly to the sale order, that type of expenses, if you book to this sales order, then we will go for month-end activities along with the production orders. Here, month-end process, same similarly, month-end process, production order plus sales order, both we have to do. Month-end process, both the production order as well as a sales order. Production order means similar variance settlement. Then if any expenses additionally booked from FI side, all revenue or any discount required to this sales order, then we will book to the sale order and we will calculate some result analysis on method. Then result analysis method concept we have to do. Then after that we will go for settlement. That means here in this scenario, additionally we have to do result analysis calculation and settlement of a sale order. These two additional steps we have to do for this valuated sales order costing scenario. Understand? That means here this valuated sale order stock means at the time of a sale order creation itself, then receiver object is the profitability analysis. We can see settlement rule will up. Settlement rule will we can see in the sale order. In this scenario, settlement rule will not applicable because of we are not doing any sale order settlement. In this scenario only we are do sale order settlement. That's why in sales order itself we can see settlement rule. Settlement rule is the profitability analysis. So for that, for this product cost by order scenario, we will go for COPA profitability analysis brief introduction. Then this we can implement product cost by sales order along with valuated sale order costing controlling object. That means here in this scenario, additionally one more topic is there. Here production order only settlement happened. Here product along with the production order, sales order also due to this through result analysis calculation and settlement. Then here at the time of a settlement, then COPA document will generate because of its receiver should be COPA oriented, but not a cost order, not costing, not a cost center like that. That's why whenever we are going to implement, majorly we will go suggest for COPA implementation requirement. Normally, I'm going to say, but mandatory means better to implement bin, then we can do perfect product cost by order scenario. This is a validated stock. Validated stock are two scenarios. One is a product cost by order without sell order controlling object. Second one is a with order sell order controlling object. Then second one is the non-validated stock. Rate will be available for this material, but not a value oriented. As for example, normally project systems, they are going to implement this type of expenses, this type of a scenario. They will do expenses, but there is no goods receipt concept for that material. Only quantity will update. That quantity will go updated in sale order stock for all scenarios. But in this goods receipt and settlement, there is no accounting treatment. That means normally goods receipt time, what is accounting entry will generate inventory account debit to cost of goods manufactured or change in stock account added. Then at the time of this not so delivery time, at the time of a goods sale order and the delivery time, that delivery time what is accounting entry cost of goods sold account debit to inventory account. That means these two we are not value oriented. Value itself is a zero, but we will do sale order costing. But sale order costing, that cost will go update in material this rate, then the expenses and this quantity, but no goods movement, no value oriented. Accounting treatment means there is no accounting entry at the time of these two if you are following a non-validated stock, because of system will identify based on the configuration. System will identify non-validated stock. And here, if you do production order settlement in this scenario, sale order cost object with sale order controlling object, then production order COPA is the control, COPA is the receiver at the time of a settlement. But in this scenario, sales order, if you go and check in production order settlement, if you do production order settlement, that expenses, what are the expenses? Because here there is no goods movement. That means goods issue, normally goods issue plus activity confirmation minus goods receipt equal to either variance or WAP. This is normally logic, but here there is no goods receipt concept in this case. That means here this total goods issue raw material consumption as activity confirmation is nothing but a conversion cost. These expenses will go and updated in sales order at the time of a settlement. This is the very important. In non-validated stock, because of there is no goods receipt concept, then how much of a expenses we booked at the time of a goods issue time and how much of a conversion cost, activity confirmation cost we booked at the time of a production order confirmation, those two expenses will go to settle to the sales order at the time of a production order settlement, because here receiver is the sale order. This is the difference between again validated and non-validated stock concept. Non-validated with sale order controlling object. Here also sale order controlling object. Here also SO controlling object. But difference is the non-validated. So that expenses at the time of a settlement, this will go to the update in production order. Receiver is the sales order. And similarly, month-end activities, how what we are going to do in validated stock. Here also we will do month-end process, production order. Anyway, production order we will do. At the time of a production order settlement, sale order will update. Then sale order result analysis calculation we will do, and sale order settlement. This one. That means here these three processes are we are going to design for this one. See here, that means here product cost by sale order is the completely depends upon the make to order scenario, and make to order scenario means based on the customer master only we are going to manufacturing. There is no concept of a standard costing, because of if you do standard cost estimation, material rate will go and update in material master, so that rate will go applicable to the all customers. This is not a correct. That's why instead of a standard costing, we will go for sale order costing. Then in sale order costing, in product cost by sale order, there are the two types of scenarios. One is the validated stock, second one is the non-validated stock. Then validated stock, nothing but again two concept. One is the sale order costing with just like a normal product cost by order scenario, means month-end activities of a similar point of view. And the second one is the non-validated stock. Second one is undervalued stock. Along with the sale, along with the production order, sale order is the controlling object also. Month-end activities plus result analysis calculation as well as a sale order settlement. Why this sale order settlement required means if there is any additional expenses we need to book for sale order. Plus, if there is any gap between delivery to billing, I will explain at the time of a configuration and the testing. Then what is the clearly? If there is any gap between delivery and billing, that concept comes under the result analysis calculation settlement. This one. That means here in sale order, we can see the profitability segment is the settlement rule. Is a will at the time of a settlement, COPA document will generate that. And the second one is the non-validated stock. Non-validated stock is the one type of a concept under that product cost by order. But here sale order is the controlling object, no doubt at all because of this one. Here also we can do sale order costing, but rate will go updated in material mass. Sorry, in sale order point of view. But at the time of a settlement of a production order, that amount, whatever the amount, goods issue and confirmation cost will go update in sale order. And month-end activity same what we are going to do same this scenario with sale order controlling object. Here also we can do this. That means here in non-validated stock, production order at the time of a production order creation, sale order is the receiver object. At the time of a sale order creation, profitability segment is the receiver object. That means here production order or process order, whatever it may be. But production order means settlement means sale order, and from sale order to profitability segment, COPA. That's why here, if you are going to implement a product cost by sales order, better to propose COPA also, whether if it is a required whatever it may be, but better to try to implement this COPA, then only it will give a correct picture. Ultimately, COPA is a reporting tool, reporting point of profitability report is a good reporting point of view. That's why here, because of here also sale order settlement is the COPA. Here also sale order is the COPA. Here production order, all expenses to sale order to COPA. That's why whenever I go for implementation of a product cost by sales order scenario especially, I am going to convince to the customer implement scope because of our convenience purpose, our method, our work is going to simplify purpose. This method we are going to use. These techniques I am going to implement configuration as well as testing next sessions. Okay, thank you.